Welcome to the Tech Money Podcast, where the worlds of technology and personal finance collide. Hosted by certified financial planner, speaker, blogger, and self-proclaimed personal finance nerd, Malcolm Ethridge. Each episode aims to make you just a little bit smarter about your money, all from the perspective of the tech professional. Without further delay, here's your host.
Hey there, listeners. Malcolm here. And on today's episode, we're talking taxes. And even though taxes really are one of my favorite topics in the whole wide world, I am by no means an expert when it comes to the tax implications of working abroad as an American citizen. So I thought I'd call up someone who does know that world very well, if I might add, to have a conversation. If you've ever wondered what it would be like to work overseas, or maybe you're even in the middle of mulling over an offer right now, or maybe you're just a tax nerd like I am. Either way, this episode is for you. On today's show, I'll be speaking with international tax expert Katrina Haynes, discussing some of the key things you need to know about taxes as an expat. Katrina initially spent time as a senior tax manager at a couple of Big Four accounting firms and a couple of Fortune 500 companies as well. Then she decided to take all of that experience and founded Haynes and Associates, where she provides tax consulting and tax prep specifically to expats and foreign nationals. So you're definitely in for a treat. So with that brief introduction, welcome Katrina Haynes to the Tech Money Podcast.
Thank you so much. Thank you for having me. I'm so excited to be here today.
I can tell it's coming through. And it's probably because you literally love taxes more even than I. When I called myself a tax nerd, like I think your excitement is at like a level 12, and I'd consider myself maybe like a 7. So
Okay.
hopefully between the two of us, we can help make something as humdrum as taxes not seem like so much of a chore. So before we get started into any of the important stuff, or I shouldn't say important, any of the meaty pieces that we have set up for this, I breezed through your resume quite a bit while I was introducing you. What did I miss?
So I think you were pretty thorough. I did start my career in Big Four, and I spent probably the majority of my career there. But I also had some experience. I've been in expat taxation and foreign national taxation from the beginning, and so for me to be a good client service provider, I felt that it was best to understand what my clients' needs were. So I did leave to run a global mobility program for a pharmaceutical company for a period of time, and then also working for I call it the best non-alcoholic beverage company in the world as their global mobility tax manager, which allowed me to get a more global perspective of taxation when I had historically only been looking at the US side. So those were the only other two things. And it really does help me to serve my clients better because I understand the complexities not only of US taxation, but also global taxation, and then what their needs are as it relates to managing these populations.
Okay. See, so that was, a couple of crucial pieces to explain why you are the person who knows this better than most, I would say. But so before we get too much into the nitty gritty, I want to start surface level because I used the term expat a couple of times, and you maybe even have said it a couple of times already. We're talking about an expatriate. I know that another side of your expertise is with foreign nationals. Can you kind of run us through the difference between being an expatriate and a foreign national?
Absolutely. So an expatriate is a general term that means anyone living and working outside of their home country. When we as US people are talking about expatriates, we're talking about US citizens and green card holders. And that's important because if you are a US citizen or you are a US green card holder, you are subject to US income tax on your worldwide income, even if you are not living and working in the United States during the year. So for them as an expat, I hear people all the time say, oh, I'm going to move to Dubai and I won't have to pay taxes. Well, as long as you're a US citizen or a green card holder, you are going to have to pay taxes. Plus, Dubai has a value added tax that's insane. It's not, you aren't going to pay and file an income tax return, but you're going to pay. For foreign nationals, however, this is when we're talking about non-US citizens, non-green card holders that are living in the United States. And so the tax laws vary a little bit as far as what you can do when it relates to expats and when it as it relates to foreign nationals, mostly because there is a double taxation that can occur. If I'm a US citizen and I'm living and working in Italy, then Italy is going to want to tax my worldwide income. The US is going to want to tax my worldwide income. And then same if I'm a foreign national from Italy into the US, I may have to deal with the same thing.
Everybody wants to get paid.
Everybody does
So
get paid.
if I took anything from what you just said, it's the fact that as long as you plan to hold on to that blue passport, you are
Mhm.
going to have to file an income tax return here in the United States, no matter where else you're living at the time you're earning a living. So one thing that I do know on this subject is that there are a number of countries who've enacted treaties to help prevent their citizens from being taxed twice on income earned in a foreign country. You refer to it as double taxation. But
Mhm.
as is the case with most things embedded in the US tax code, there's a few boxes that have to be checked in order for you to qualify. So if you don't know to look for it, then, sorry for you. So, for instance, you have to be outside of the US for a certain number of days and pass a residency test. From my understanding, you'll correct me if I'm wrong, I'm sure. But then also receiving the special tax treatment, as I mentioned, isn't automatic. You've actually got to do a few things to trigger it. Am I right or wrong in that
You're
understanding?
correct. So there's a couple of things though that so when we're talking about tax treaties, we're talking about foreign nationals. So non-US citizens, non-green card holders that are living and working or otherwise have an income tax tie to the US, whether it be they're investing in rental property or they've got a business that they're operating in the US. For us as US people, the treaty doesn't apply on our US return. So there's
Hmm.
two different types of taxation that we're talking about. There's the domicile basis and there's the tax home basis. The majority of the countries in the world tax on the tax home basis, meaning that if I'm in the UK and I'm a UK citizen, if I leave the UK and have no income there, I don't have to file a tax return anymore. The
Mhm.
US is like it's like your crazy ex-boyfriend or girlfriend. It's like, no, we're gonna be together. Okay. You thought you were leaving, but no, you're gonna pay the tax. You're gonna pay it regardless. And like you said, as long as you have that blue passport, and there's actually a specific way you have to renounce your citizenship. And
Mhm.
even then the IRS can hold on to you for another 10 years through the what's called the expatriation process. There's actually a
Wow.
whole group of taxpayers out there now. They call themselves accidental Americans.
Hmm.
And a lot of them are taxpayers that have received citizenship through their parents, or it happened as a baby and they may not even have known they were citizens or they were born here. I mean, literally, they were born here on a layover on a flight or something. And then now they're tied to the US for the rest of their lives. Some of them don't even speak English. So they don't even know where to go to find how to file a tax return. And the IRS says, well, it doesn't matter. You need to figure it out because you owe tax on your worldwide income. And I've had some clients where they've since passed away and we realized you left when you were 18, but you had a worldwide tax filing requirement that you never
Wow.
adhered to. So now the IRS is coming after your estate and you haven't been here since you were 18 years old.
The IRS, I mean, just to not that anybody needs convincing how much of a bully the IRS is, right? But like the fact that there's a thing written into the tax code called a kiddie tax,
Yeah.
where like if my infant daughter earns too much income in any given year because however she went out and found part-time work, then
Hmm.
like the IRS is coming for that money. Like the fact
Yeah.
that that exists in our tax code tells you everything you need to know about their willingness to come find you anywhere around the world. So, like, I mean, nobody needs to be convinced, I guess, is my point that the IRS is
Yes.
serious when it comes to coming and finding that money. But I believe there's two key laws that the
Mhm.
IRS did put in place to help you avoid being taxed twice on income earned outside of the US. Can you walk us through what those two key exclusions are?
Yes, yes. So, I want to go back to my the last question. It's
Yep.
possible for you to use the income tax treaties as a US person, but not on your US return. So you have the way that the treaties are written, you have to be a it says you have to be a resident of one contracting state or a citizen or national of one contracting state living in the other contracting state to get the benefits of the treaty, and it's going to apply in your host location. So if I'm a US person living in Italy, the
Hmm.
US Italian income tax treaty is going to apply to getting me benefits and relief from double taxation in Italy, not in the US. The US, again, crazy ex-boyfriend or girlfriend, is going to hold on to you, but you're going to get the benefit in the other country. Now, what the US does do, what the IRS does allow, there's two different ways to duplicate that double taxation, because as a US expat, you can't use the income tax treaty on that US return. The
Hmm.
first is the foreign earned income exclusion, which allows you to exclude an amount of money from taxation. For 2020, I believe it's $107,600 that you're able to exclude, plus your housing expenses, off of any income, as long as you were either outside of the US, physically present outside of the US for 330 out of any 365-day period, or if you became a bona fide tax resident of another country for a calendar year. So January 1st through December 31st. So the first test, you have to just be gone. The second
Hmm.
test, you have to be a tax resident. Now, you can be a tax resident of a country that doesn't have an income tax. So if you do decide to move to Dubai, the United Arab Emirates has the first right of taxation because you're the tax resident there.
Hmm.
So you can take advantage of the exclusion if you're living in a country that doesn't have an income tax, like United Arab Emirates or Trinidad and Tobago. In my mind, it's because the IRS's thought process is you're still paying a tax. You're still paying value added tax. You might have sales tax. You're still paying tax. They just don't have an individual income tax regime that's equivalent to ours. But as a tax resident, if they change that tomorrow, you're subject to tax and that income is subject to tax.
Hmm.
So that's the first one, the foreign earned income exclusion. The
Well,
second is the foreign, oh, go ahead.
so hang on a second. So as far
Mhm,
as the foreign earned income exclusion, you mentioned the fact that it has a cap on it. I forget
mhm,
the 2020 number, but I did write down the 2021 number, which is
mhm,
108,700. You just gave us
mhm.
2020. That may sound like a lot of money to a lot of people, but for folks who are fortunate enough to work for a company that wants to send you abroad, especially for folks who listen to this podcast, a number of them are tech executives in technology. That's not a huge amount of your total compensation, right? So we're not
Yeah,
talking about a way that you can completely eliminate all of the income that you made working in another country. We're talking about a slice of that income. It is the most common way, from my understanding, that expats get to reduce or eliminate some of their U.S. tax liability. But still, like I said, if you're a person who makes, three, four, $500,000, that 108,000, 109,000 isn't going to get you all the way. So I just think that's important to
right.
point out for anybody who's thinking, oh, well, it'll be offset dollar for dollar, and then I can call it a day. But sorry, you were on a roll and I cut you off. So
No,
by
you're
all
fine.
means.
You're fine. I also want to mention, since you're talking about international assignments,
Hmm.
if you're on an international assignment, everything that's paid either to you or on your behalf becomes taxable as compensation. So I used to tell people when I was sending people out, expect your W-2 to triple or quadruple when you're on an assignment. Because if you were to send me, I mean, I've lived on assignment in India. Okay. If you were to send me to India, of course, the cost of living is lower, but because of the culture in India, you are required to employ a certain number of people. So if you make a certain amount of money, you're expected to have a housekeeper, you're expected to have a driver, you're expected to have all of these people to give into the economy, right? So if you are paying me what I'm getting paid in the US and you're expecting me to find housing equivalent to my US housing, you're expecting me to employ a bunch of people, you're expecting me to buy a car and all this other stuff, plus pay tax in India, plus pay tax on my worldwide income in the US, I'm going to say no, thank you. You can save that for somebody else, right? But what companies will do then is say, you know what, we'll cover that. We'll cover your driver. We'll cover your housekeeper. We'll cover your housing. We'll provide you with 6, 8 trips home, 4 trips home. I don't want to get companies in trouble. But 2 or 3 trips home every year. We're gonna, we'll provide you with a cost of living allowance or a hardship allowance if you're going to like an Iran or you're going to, a Sudan or something like that. All of that stuff becomes taxable to you, even if that money never hits your hand. If you are living in corporate housing, then the fair market value of that corporate housing becomes taxable to you as compensation. So
Mm.
now, if I was making $200,000 and my assignment allowances are 200,000, I'm only going to get 100 or so thousand of that in exclusion, and that's provided that I don't have any U.S. days in the U.S. work days. So, for
Mhm.
example, let's say you're working for it. Let's say you're working for Facebook. I have a couple friends that work for Facebook, and you got to come back to California for 2-3 weeks every year for some sort of team meeting. Well, those days aren't foreign source days. Even if you're paid by a foreign employer, those are U.S. source days. They don't qualify for the exclusion.
Mhm.
Okay, they don't qualify for the foreign tax credit. So it's really important to these are little nuances of the code, but to your point, that $100,000 is not going to do much for you. Now, I do
Yeah.
want to say also that you can go over that amount with your housing expense. So the IRS has a base threshold, and then there's a maximum that varies by location. So if I made $200,000 and I have an additional 50,000 of housing, then it's possible that I can take over that 107,000 or so by adding that housing exclusion on top of it, as long as I have enough foreign source income to do that.
Mhm.
Also, for married couples, if you're both working on assignment, then you can both get that maximum amount. You just can't duplicate the housing unless for some reason you're legitimately living in two different locations. So if you're married and one of you is on assignment in Portugal and the other one's on assignment in Italy, clearly you can't live in the same house. So you could have two housing expenses. But if you're in Switzerland and Germany, and you're both living in Germany and just driving back and forth, then you can only use the housing expenses one time.
So what I'm gathering also as I'm talking to you about this, and I mean, like I said, I've scratched the surface as far as the tax code is concerned for expats, but obviously I have nowhere near the same level of understanding as you. But what I'm gathering from talking to you just this short amount of time is that if I'm a person who's considering accepting such an assignment, it would be a really good idea to speak to an accountant who's knowledgeable, excuse me, about those things while negotiating the compensation package, simply because there's a few things in there that I'm not going to know are common unless I'm
Mhm.
talking to someone who's also dealt with, you know, 15, 20, 50 clients who also went and took assignment in India, for example, and knows exactly how those things work, to be able to request X amount of housing allowance to use up the full housing exclusion versus having it come in, you know, regular salary or whatever the mix is that you want to use. It sounds like it's really important to have somebody who's been there, done that you can talk to in the middle of negotiation to know which levers to ask to pull to benefit yourself the most on the backside of this thing when it comes time to talk to the IRS.
Absolutely. And to most companies' credit, they will provide you with a comprehensive package, which normally includes tax return preparation.
Hmm.
With that being said, so when I was working for the best non-alcoholic beverage company in the world, you get people that are from all over the world
Hmm.
and they have trailing issues. And if you haven't been on assignment in 5 years, the company's not going to pay you for you to get your tax returns done. So there may be issues as a result. So for example, prime example, you receive a bonus. Your bonus is not taxable to you on the day you receive it. It's taxable based on the period that you earned it, almost like a stock option.
Hmm.
Okay. So if I was on an international assignment here and then I come back and I get paid while I'm in the US, that a portion of that income is related to the country I was in when I was on the international assignment. So if I'm no longer covered under the program, or if there is no program, I still have a foreign tax return that may need to get done. I have got foreign tax credit issues. I've got all kinds of stuff. So most companies will provide that support. The issue is if you're the first person and they don't know what you're going to need and you don't know
Yeah,
what you need. And
they're learning
so,
on you.
I mean, exactly, and that is not a good situation to be in. I had one client, who told me he happened to have 5 kids. He and his wife were, they were doctors, and they were overseas, and they were saying, "We can't buy bread. We got 5 little kids." They had 5 kids under, like, 7. And they said, "We spend so much money on bread. What we're getting is not enough." But the company didn't know because it was the first time. They'd only sent single people. They'd never sent families. They never thought about the cost of groceries. They thought about the cost of housing and car and things like that, but they didn't and even in most the US is a country of excess. Everything is huge.
Sure.
Finding a car overseas that fits 5 people, if you're in Singapore, you're not getting a car. You're getting a bike or you're getting a public transportation. So the things that we as US people are so used to having, just being able to find the equivalent overseas, sometimes it's not possible. So it's definitely important to know what to ask for if you're the first person, because not only can you create an issue for yourself personally, the company can create an issue for themselves where they've created an entire separate legal entity just by having you working somewhere. And then now that entity is subject to tax, a portion of their US earnings. So it's definitely important for you specifically, but also if you're trying to talk to your employer, it's beneficial for them too to get it set up right before you go, because if not, it could cost them on the back end as well.
So I probably already know the answer based on everything you just shared with us about the complexities of the way the tax code treats folks earning income outside of the U.S. But any idea specifically why expats receive an automatic filing extension every year?
Yes, actually, a lot of times it's just because they can't settle their foreign tax situation by April
Hmm.
15th. So
Okay.
if, let's say you're in another country where they're on a calendar year for taxation as well, then you would be filing that foreign return simultaneous with the US return. And if you're going to take advantage of the foreign tax credit, then you wouldn't know how much creditable tax you would even have. But the
Hmm.
majority of countries, they don't you don't file most tax returns until over the summer, hence the June 15th deadline. So
So,
that go ahead.
so I was going to ask then why states haven't followed suit, right? States, if I understand correctly, still require you to file by April 15th. Any idea why
Mhm.
that hasn't become a little more uniform?
Well, states are all over the place. I don't
Yeah.
know. I personally don't take advantage of the June 15th extension so much just because the October 15th extension is available. So I normally
Okay.
just default to the October 15th extension and make sure that my states are extended as well for that particular reason. I don't want to have to file a state extension when I didn't have to file a federal extension. I would rather just extend it
Hmm.
all at the same time. I also want to point out that a lot of states don't follow the same rules and regulations for the expat taxation. And so
Hmm.
um, I actually publish a guide that looks at the state by state differences from the federal as it relates to the foreign earned income exclusion, the foreign tax credit, what visa statuses are impacted. Is it a domicile state, or is a state that taxes on residency? Meaning that not only is the government, the IRS, that crazy ex-boyfriend or girlfriend, but also that state is too. So we were talking about California. That's one of those situations where you may leave, and unless you establish residency in another US state, you cannot break your ties there.
Hmm. So you mentioned I'm turn the ship a little bit here because you mentioned something that I wanted to make sure I came back to, which was kids, right? You mentioned the family that's got, I don't know if you said five kids or they're a family of five, but children
Yes.
involved in the equation, period, right? Can I still use the
Mhm.
child tax credit, the standard, child tax credit from the Fed if I'm an expat but my kids are U.S. citizens?
As long as they have a US Social Security number, or I believe you can use it if you have an I-10, which is an individual taxpayer identification number. But if they're US citizens, they would have a Social Security number. So
Hmm.
yes, you would be able to take advantage of the child tax credit, even if you're not in the United States.
Okay. Good to know. I was concerned that I would lose that if I said, not that it's a huge deal, but it's, I mean, a decent amount, right? A couple thousand
Well,
dollars per kid, and depending on what the Biden administration manages to pull through, it could be
right.
considerably more than that.
Right. Well, and
So,
and keep in mind that even if you're an expat, even if you're not in the US, the IRS treats you like you're here. So you get
hmm,
all the benefits, credits, deductions, and exclusions, and so on and so forth, as if you were still in the US, because that's that benefit of the long arm of taxation. That's the one benefit we get, is we don't lose anything. We just have
that's
more
what
of
I
it, so to
immediately
speak, as far as
assumed.
taxation. Yeah.
Uh,
No, we don't
I'm
lose
glad to
anything.
know then
We
that I
just get
was
more tax.
I was being a little too pessimistic there. I just assumed that the IRS was all about taking and not
Yeah,
also
well,
giving. But
yeah.
let's talk for a second about banking, right? So if I'm living in a foreign country, then I'm also maybe needing to get access to funds in foreign dollars and maybe want to jump into the foreign banking system. And I know the American government doesn't take too kindly to American citizens having bank accounts outside of the country, right? They are always concerned about uh, laundering money and fraud and tax evasion and everything else. But am I allowed to open up a foreign bank account while I'm working in another country?
Absolutely. The IRS doesn't have an issue with us having foreign bank accounts or financial accounts or investment accounts. The issue is, are you reporting that income back to the United States? That's
Hmm.
the thing. It's not you having it. They don't care because you holding money in another country or another currency, that doesn't create the taxable event. The taxable event is when the income is earned. But
I
the
see.
perception is, if you are hiding money from me, what else are you hiding?
Hmm.
So, and you're what you're talking about is, there's a specific form, it's a disclosure form only. There's no tax calculated, called the Report of Foreign Bank Accounts form. It's actually the Financial Crime Enforcement Network's Form 114,
Hmm.
and FinCEN is a separate division of the U.S. Department of the Treasury. So it's like a sister entity to the Internal Revenue Service. You have to disclose all of your bank, foreign financial, and investment accounts with them. And they kind of cross reference it with whether or not you've actually reported any income on the US return. So, say, for example, I have a bank account overseas that's $100,000 in year one. In year two, it's $110,000. That allows them to look for that $10,000 adjustment anywhere. Where did that extra $10,000 come from? Was it interest?
Hmm.
Did you have 10,000? Did you have that $10,000 in UBS Bank somewhere else? Did you? It allows them to see the movement of the funds. Or did you not report that bank account at all? And where US taxpayers in particular have to be careful is, when I started years and years ago, we didn't have any way, we the IRS didn't have any way to confirm this. It was all based on whatever the taxpayer said, that voluntary honor system. I'm expecting you to tell me the truth. That, kind of the golden rule of taxation, right? But that doesn't
Hmm.
work. So the IRS, working with the US Department of the Treasury, came up with these FATCA tax regulations, the Foreign Account Tax Compliance Act, which basically created a system whereby, in multiple jurisdictions, I think it's like 114 different countries, the IRS has the ability to see what you're doing in those bank accounts just as if you were doing it in the US. So,
Mm.
what happens is, when you go overseas, so a good friend of mine is from the Bahamas. She goes to the Bahamas. She's a US citizen, naturalized
Mhm.
citizen. She goes to open up a bank account for her and her mom, and the first question they ask is, "What's your US Social Security number?" And she said she was taken aback. And I said, that's because they are going to report all of your transactions, even though she was just being signatory over to her mom's account. Doesn't
Mhm.
matter. They're going to report all of those transactions back to the US. They're going to confirm, they're going to look to see if you filed that FBAR. They're going to look to see if you've reported any earnings on your US tax return. And if not, they've created an audit trail to find you. And again, it's, if you're hiding this, what else are you hiding?
And
They
I
have
know the
started,
IRS
man.
I know the IRS lobs a pretty hefty penalty too on any accounts that aren't declared with the Treasury. Like it seems like it's
Yeah.
very easy to get yourself in trouble there.
Yeah, there's a compliance penalty, I believe, of $10,000 or so, and then there's a penalty, a criminal component that's, well, no, there's a compliance penalty of $10,000, but then they can
Hmm.
take up to 50%, excuse me, of the balance of the bank account, and they are doing
Yikes.
that. Plus 5 years in federal prison, plus additional criminal penalties.
Plus, even if they don't push it that far, like how long are you going to be under a microscope thereafter? Right? Like how
They're
many
pushing it
more
that
years
far.
will they? Wow. Wow.
They are
Okay.
pushing it that far. I see articles every single day where regular people that are, 50, 51. I mean, I teach a class on this. Plastic surgeon goes to Dubai to do some surgery for one of the, members of the royal family. They put the money in a bank account in Dubai because it was easier. He transfers it back to the US. The account was only open for 3 months. He didn't report it. He's serving a year and a day. We've got another
Wow.
guy from, I believe he was from Mexico. He had some sales between, same thing, between the US. He was in California and Mexico. He didn't report the fact that he had a Mexican bank account, again, just to transfer the money back in the US. He's getting a year. This guy was 80 something years old and opened a Swiss bank account with 20 bucks and forgot about it, serving years and years and years. I mean, it's they
Wow.
are locking people up for this stuff. And it's a disclosure form. You don't even have to pay any tax, just report it. But if you don't know, then how can
Yeah.
you do that?
Yeah. I mean, those sound like all clerical things, right? Like not even anything mischievous, at least on the surface. And still, just for not knowing the rules, you're getting, not a slap on the wrist. It's a
No.
significant penalty. Geez. So
Yeah.
if I'm taking anything from this, it's when you go overseas, don't open any bank accounts. Take as much cash as you're going to need to live on for however long you're there. And
I wouldn't say that. I would say just report it. All you have to do is report. The form is so simple. It every time I see somebody go to prison for this, I'm like, you got to be kidding me. It's
yeah.
bank account name, bank account number, how much was in the account, or you can check a box that says I don't know. That's it. That's all. That's
So
it.
let's turn the corner a little bit really quickly and talk about retirement. Can I
Sure.
still contribute to my 401k if I'm working outside of the US?
It depends. It depends on the how you're employed. So if I'm a
Hmm.
US person on an international assignment from a US company and I remain on US payroll, then you can continue to contribute because you're still in the US benefit plan system. If you are a domestic or a local hire of even if it's the same entity, so let's say for example, if I go and I start an accounting firm in India
Hmm.
and but it's an Indian based entity, then because of the way Internal Revenue Code section 401k is written, I most likely won't be able to have a qualifying plan, but you cannot contribute to your 401k outside of a US based employer.
Hmm. Okay. So I've got to figure
Yeah.
out other means to
Mhm.
get those dollars into those savings accounts for the
Yeah.
years that I know that I'm going to be away.
And so that's also something to have a conversation with your employer about. And I've seen a lot of different international assignment design
Hmm.
where you can create something like that. So, for example, you got to be careful with 401k plans in particular because in some situations you cannot have um, you cannot have certain people participate in the plan or it'll bust the plan and now it's not a qualifying plan, it's not a 401k and now everything you
Hmm.
put in it is subject to tax, right? So there are some ways where you can actually create almost like a shell company and create, I'm going to put in air quotes because it could be something as simple as setting up a separate LLC just for your international employees, just so you can run US benefits for them, even if they're getting paid domestically in
Hmm.
the local jurisdiction.
I see. To keep them from ruining it for
Yes.
everybody
Yes.
else and forcing elective
Exactly.
distributions. Um,
Exactly. Exactly.
so on the same note though, Social Security. If I'm not
Mhm.
eligible, right, for Social Security, because will I still have to contribute to Social Security? I guess is my first question.
Yes and or no. Well, yes or no. Okay. So there's a couple different ways that this
It's
could be
never
yes
easy.
and yeah, it depends is the answer you always tell people when they ask you questions. So if you are employed by a US employer, so I'm on an international assignment for my US employer and I remain on a US payroll, then they are required to withhold and remit US Social Security for me. Now, keep in mind again, if you're on an international assignment, all of those allowances are also going to be subject to Social Security as well. So if they are not covering you under some sort of tax equalization or tax protection, then you might want to ask for it because even if you're not paying federal or state, or if there is no state, that
Hmm.
that additional FICA tax could hurt. So
So
it's mhm.
am I eligible for Social Security benefits then, even if I decided to stay in the country where I'm stationed when it's time for me to retire?
So if we have what's called a US totalization agreement, so let's say I'm going to the UK and I don't have my 40 quarters
Hmm.
of employment, but I go to the UK and let's say I work for 2 years, I still don't have my 40 quarters. So say I have like 8 years in total, but I struck it rich, but I still want to withdraw from the US Social Security program. I'm able to take because we have what's called a totalization agreement, which is basically a US and UK or whatever country social tax, separate from a treaty. So if you look at an income tax treaty, there's a social security clause, but that determines who gets to tax the social security benefits. A totalization agreement governs who you have to pay social tax to in the
Hmm.
event that you are required to pay social tax in multiple jurisdictions. So again, if I'm on a US payroll, the US is going to require I pay social tax. If I'm working in the UK, then they're going to require that I totalization comes in agreement comes in and says, "No, you're only required to pay social tax in one of the other jurisdictions." So if I'm a dependent worker and I'm coming from a US employer, I would pay social tax then. If I'm an independent worker, so I'm self-employed, then I would pay social tax where I'm physically sitting. So if I'm self-employed, I would owe social tax in the UK, but I would be exempt from social tax in the US. So if say I'm a single member LLC and I'm filing a Schedule C, then I would be able to exempt my earnings from US self-employment tax as
Hmm.
long as I get what's called a certificate of coverage, which is just a letter from the Social Security Administration saying so and so is paying into this jurisdiction, so they're exempt from the other jurisdiction.
So
So,
it sounds
or
like I was gonna say it sounds like that's another one of those things that it's a really good idea to have planned out well in advance rather than to get
yeah,
there and say this is what we're doing and we'll just figure out how to make it work.
yes,
Because you want to make sure that if you've paid into the system for even 20 years here in the states, you're at least getting those benefits back out. Once it's time to claim them. But if you don't know until you've decided to hold up, wherever that place is, it may be too
mhm.
late to do anything about it. So, I mean, I'm glad because my goodness. So my last
Exactly.
question that I have, this is one I love to ask all of my guests. It's not a tax related question, so you can actually turn your brain off for a second because, my God, you've got a lot stored in there. So let's say you never discovered your passion for taxes, right? I know that's hard for you to imagine, but let's just say hypothetically for a second, you never discovered taxes as your passion, but money was not a decision in your factor. Money was not a factor in your decision at all. What do you think you'd be doing right now?
I would be writing short stories.
Hmm.
That is what
Okay.
I wanted to do until I was a junior in high school, and I met a very unfortunate English teacher who hated. I always say she hated the way I wrote my name on a piece of paper. She hated everything I wrote, and I decided at that point that I did not want to eat based on other people's opinions of me. And I decided I wanted to be in a technical position, and I had been doing my own taxes since I was 12 years old. My dad made me get a job at 12,
That
and
explains a lot.
at this at this point, I back then you couldn't download the forms or e-file. You had to go to the library, and they had rows and rows of books and booklets and forms. And he came back, he gave me a W-2 and a Form 1040 Easy and a filing booklet, and he said, "You need to learn how to figure this out." So I'll never forget. I did my first tax return then, and I got back $3. It was supposed to be $3.14, but they don't give you the cents. So I got back $3, and I was really excited about it. So when I had my career change kind of aha moment in high school, I said, "Well, let me look into this accounting thing." And I was able to take some accounting classes in high school, really liked it, and the rest, as they say, is history.
Well, I am very, very glad on your behalf and on your client's behalf that it did work out for you the way it did. Something to be said for serendipity.
Yeah.
Well, this was great. I can't believe it, but this has been, the entire episode. I'm like learning as I'm going and talking to you about this. So, like, I can't believe it's over. But where can people find you if they want more Katrina after this?
Absolutely. You can follow me. Well, I would say go to my website, www.hayneshelp.com. Also on Facebook at Haynes Help, on Instagram as Haynes and Associates, and check out my YouTube channel, Haynes and Associates. There's a lot of snippets from some of the classes I teach on different expat tax issues. If you have a question, or you feel like you're going on an assignment, or you feel like your assignment may not be what you think it should be, You can go on my website. You can schedule time to meet with me. If you go to the contacts page, then it links you directly to my calendar, and I'm happy to have a quick chat.
Thank you very much. Well, Eric with an A, why don't you go ahead and take us home?
All right, I can do that. I'll tell you what, this ship turned around quickly, Malcolm. When you started off with how exciting taxes were, I just wasn't sure you were going to be able to do it. And I'll tell you what, you guys, you did. I mean, Katrina, you brought so much amazing information. I'm not in that situation of working overseas, but I know that I better figure things out if I ever get that offer. So thank you so much for being here. Malcolm, of course, thank you for bringing her on the show. And of course, last thank you goes to you, the listening audience. Thank you for tuning in and listening to the Tech Money Podcast with Malcolm Ethridge. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Malcolm comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your colleagues. Again, thanks for listening today. For everyone at Tech Money, our hope is that this show helped make you just a little smarter about your money.
This has been the Tech Money Podcast. For more information on today's topic, to review the show notes, or to catch up on past episodes, be sure to check out malcolmethridge.com/podcast. And if you have an idea for a show topic that you'd like us to cover, or you want to send us feedback, the web address again is malcolmethridge.com. You can also find Malcolm across all social media platforms at Malcolm on Money. This episode was written and created by Malcolm Ethridge, with the production, the editing and sound controls powered by Top Advisor Marketing, Proudmouth. This has been a Malcolm on Money original. Thank you for listening. The information shared in this recording and by its guests represents the views and opinions of the guests and does not represent the views or opinions of the host. This content has been made available for informational and educational purposes only. This content is not, nor is it intended to be a substitute for professional financial advice. It is always recommended that you seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your personal financial situation.